It was a signature, a single presidential order from the Oval Office involving Bitcoin, issued by Donald Trump, that triggered quiet emergency meetings in Beijing and pushed China to respond in a way that could permanently reshape the future of money. Everyone thought the US would be first to weaponize cryptocurrency. Everyone assumed Bitcoin was too decentralized, too chaotic, too uncontrollable to be pulled into geopolitics. They were wrong, because China didn't just respond to Trump's order. They responded in a way that no Western government expected, and the story of how we got here reveals a hidden financial rivalry decades in the making. This is the inside story of how an American executive order sent shockwaves through global markets. Why China? This reaction was far more strategic than anyone realized, and why the next world reserve currency might not be a currency at all. Stay with me. By the end of this video, you'll understand the one pattern repeating through every empire's rise and fall, and you'll be able to see exactly where we are in that cycle right now. Setting the stage to understand China's response, we need to step back, far back, because the conflict didn't start with Bitcoin. It didn't start with Trump. It didn't even start with the blockchain revolution. The real beginning is 1944, Bretton Woods, the original power move. During World War II, the United States pulled off the most successful piece of financial engineering in human history, the Bretton Woods system. Instead of winning the war through weapons, the US won the aftermath through money. They convinced the world to use the US dollar as the backbone of global trade. Not through force, but through design. The deal was simple on the surface. The dollar would be backed by gold. Other countries would peg their currencies to the dollar. Global stability would be restored. But the hidden advantage was enormous. If the world needed dollars, the world needed America. This created what economists call the exorbitant privilege. The US could print the global currency. No other empire in history ever had that kind of leverage. China, a late arrival with a long memory, China watched all of this from the sidelines. For decades, the Chinese yuan was weak, unstable, and irrelevant to international finance. But unlike the West, China thinks in centuries, not election cycles. And as the US dollar became stronger, China quietly began planning for the moment when America's monetary dominance would begin to wobble. Two events accelerated that process. The 2008 financial crisis. China realized the global system had a fatal flaw. It relied too heavily on the US. The rise of digital payments. China adopted mobile and digital money faster than any country on earth. By the mid-2010s, China's leadership saw something the West didn't. The next currency war wouldn't be fought with interest rates. It would be fought with technology. Enter Bitcoin, the rogue asset China couldn't ignore. When Bitcoin emerged from a cypherpunk mailing list in 2009, almost nobody in Beijing took it seriously. It looked like a toy for libertarians. But as Bitcoin survived crashes, censorship attempts, and government hostility, one uncomfortable truth became clear. Bitcoin was a threat, not to China first, but to America. Because Bitcoin was a direct competitor to the US dollar's core strength, control over the global monetary system. China didn't want to embrace Bitcoin, but they couldn't allow the US to control it either. This tension, invisible at first, is what makes Trump's executive order so explosive. Origins of the conflict. Let's start at the beginning of the Bitcoin geopolitics connection. 2017, Trump's first encounter with Bitcoin during his presidency. Donald Trump had a simple, blunt view of Bitcoin. I don't like it. It's competing against the dollar. Behind the scenes, Treasury Department advisors warned him that Bitcoin adoption was rising in countries facing US sanctions: Venezuela, Iran, parts of Russia. This gave Bitcoin a strategic dimension, a dangerous one. At the time, China controlled the majority of Bitcoin's mining power. Western analysts feared China might one day influence the network, or at least appear to. Trump didn't act then, but the seed was planted. 2020, China's digital yuan announcement. Then China made its move. Xi Jinping unveiled the digital yuan, the ECNY, the world's first major central bank digital currency, CBDC. This was not some tech project, it was a geopolitical strike. China created a money system they could control down to the transaction level. More importantly, it bypassed the US banking system, it bypassed SWIFT, and it bypassed dollar-based sanctions. This alarmed Washington. Bitcoin was unpredictable, but the digital yuan was strategic. The US had no real answer. Not yet. This brings us to the breaking point. Trump's order. Fast forward. With Trump back in power, his economic advisors warned him of a new threat. Not Chinese exports, not tariffs, but digital currencies, state-controlled or decentralized, weakening US financial dominance. Then came the trigger. The executive order that sparked the crisis. Trump issued an order that effectively nationalized part of the Bitcoin ecosystem for strategic purposes. He instructed federal agencies to do three things: identify and restrict foreign influence in US-based Bitcoin mining, secure a strategic reserve of Bitcoin, establish regulatory authority over key Bitcoin infrastructure operating on American soil. This was the first time a US president treated Bitcoin as a national security asset. It was aggressive. It was unexpected. And from China's perspective, it was an escalation, because to Beijing the message was clear. The United States was attempting to militarize Bitcoin. Why this was a red line for China? China officially banned public cryptocurrency use years ago, but they never banned ownership, research, or mining hardware manufacturing because these gave them leverage. Trump's order threatened that leverage if the US gained too much influence over Bitcoin. Decentralized crypto could become a US-controlled asset. Bitcoin could be absorbed into American financial strategy. China's digital yuan project could be overshadowed, and China could lose ground in the technological arms race. So China responded not loudly, but decisively. China's response wasn't a speech, a tweet, or a press conference. It was a series of coordinated actions that signaled something much bigger. China was preparing for a long-term currency war. Here's how their strategy unfolded. Step 1. Accelerating the digital yuan globally. Within weeks of Trump's order, China pushed the digital yuan into cross-border pilot programs with the UAE, Thailand, and Singapore Belt and Road Initiative partnerships, international trade deals. Especially in energy markets, China even tested digital yuan payments for Chinese companies operating overseas, something they had been cautious about for years. This was a direct challenge to the petrodollar system. If digital currency reduces friction, and China can offer faster, cheaper transactions without SWIFT, the US loses leverage. Tightening control over Bitcoin mining and hardware. China had already forced most mining operations offshore, but they still dominated the manufacturing of ASIC miners' power chips-related hardware. After Trump's order, China increased strict inspections, export controls, and tech security protocols around mining hardware. This served two purposes: prevent US dominance over mining tech, retain influence over global Bitcoin infrastructure indirectly to Beijing. Bitcoin was like nuclear power. Even if you don't use it, you can't let your rival monopolize it. Testing a digital yuan-backed commodity system. This is the move nobody expected. China began quietly experimenting with commodity settlement: oil, metals, rare earth minerals, using a digital yuan ledger system. If successful, this would allow China to settle trade without touching dollars partners to hold and use. Digital yuan, a parallel financial system independent of the West. It wasn't just a response, it was a counterstrike. Coordinating with BRICS nations, China also met with BRICS partners Brazil, Russia, India, South Africa, and proposed deeper digital currency cooperation. Because BRICS countries have one thing in common: they're tired of being dependent on the dollar. China's message was clear: if the US is weaponizing Bitcoin, we must build our own system. This was the moment economists now point to as the true start of the digital currency war. Global reaction. Once both superpowers made their moves, the rest of the world had to respond. Wall Street reacted first. Bitcoin prices surged, then swung violently. Investors didn't know whether Bitcoin was becoming a US strategic asset, a geopolitical bargaining chip, or a target of regulation. Some believed the US hoarding Bitcoin would push prices higher. Others feared increased control would destroy Bitcoin's core principles. But regardless of opinion, one thing was clear: the era of Bitcoin existing outside geopolitics was over. Europe panicked quietly. The European Central Bank, already behind on digital currency tech, suddenly saw itself squeezed between the US militarizing decentralized crypto, China weaponizing state-controlled digital money. The euro had no equivalent response. Europe had become a spectator. Developing nations chose sides. Countries facing US sanctions like Iran, Venezuela, and parts of Africa saw China's digital yuan experiments as an escape hatch. Meanwhile, US allies moved to tighten crypto oversight in line with Washington. A new fault line appeared: dollar-aligned versus dollar-independent economies. The attempts to control the uncontrollable. Every superpower realized they had a problem. Digital currency, whether decentralized like Bitcoin or centralized like the ECNY, is fundamentally difficult to control. The US issued Trump's order couldn't fully nationalize Bitcoin. It couldn't control global mining, private holdings, offshore exchanges, decentralized code development. Bitcoin is too distributed. China's issue: the digital yuan can be controlled domestically, but internationally it faces distrust. Countries fear Chinese surveillance. They fear currency manipulation. They fear the geopolitical cost of aligning against the US. The shared problem: neither country can fully dominate digital currency. Both can influence it, but neither can control it. This means the digital currency war is not about winning outright. It's about not losing influence while the world transitions to a new monetary era. And this is where things get historical. Historical parallels in data. The fall of the British pound as the world's reserve currency didn't happen because Britain collapsed overnight. It happened because global trade slowly shifted toward faster, more efficient, more politically stable alternatives. Now we're seeing the same pattern. Dollar share of global reserves. Over the last 2 decades, the dollar share dropped from 71% to under 59%. That is the fastest decline in modern history. Digital payments in China. China now completes more digital transactions annually than the US, Europe, India combined. This means China has already built the infrastructure for a digital currency future. Bitcoin's survival despite 500-plus government bans, strict regulations, and countless predictions of failure. Bitcoin continues to clear more annual transaction value than Visa attract institutional adoption. Remain outside government control. This is the part that terrifies policymakers the most. Repeating pattern: empires rise because of money. Empires fall because of new money. Rome fell when gold supply shifted. Britain fell when the dollar rose. The dollar will fall when a digital replacement emerges, not instantly, but gradually, just like every other transition. And the race to define that replacement is the real story behind Trump's Bitcoin order and China's response. The currency war has already begun. This is no longer speculation. The US and China are openly battling for influence over the future of money. Not through bombs or tariffs, but through blockchains, CBDCs, and strategic control of digital systems. Bitcoin just became a geopolitical asset. Bitcoin is no longer a fringe investment. It is now part of national security strategies. Governments will try to regulate it. Some will try to control it. Some will secretly accumulate it, but none can ignore it. The real winner may not be a country for the first time in history. The next global monetary system might not be run by a government at all. It might be a decentralized network, a digital commodity, a hybrid of state and private systems, or something entirely new. The point is, the old system is ending, and no one, not even superpowers, can fully shape what comes next. If you found this breakdown helpful and want to stay ahead of the biggest shifts in global finance, hit the like button, subscribe, and turn on notifications.